EV, battery and renewable energy stocks update. GOEV, plug, FCEL, solo, and GEOV. So we'll begin with GOV, which is Canoo Inc. So as we can see, Canoo is up in the session of today, the 13th of January 2020, 16.03%. And so far 8.1 million shares have traded as we record this video, which is above average. And it has a market cap of $3.9 billion and 235.656 million shares outstanding. Quite a large float. It could be more, some even 10 times more than that, and 6% of the issued stocks are held by institutions. So let's quickly dive in and see what we can digest about this. So Canoo appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the MACD histogram is above zero and rising. Comparative relative strength analysis shows that it is performing the S&P 500 index. Yes, it is clearly rising and going up. So what's more, momentum for Canoo is strongly bullish. The 14-period slow stochastic oscillator is rising as investors pay higher prices for shares. Okay, the momentum is trying to rise. We have it here at the price rate of change is even below zero. You can see it is rising. Yes. Okay, volume as measured using the unbalanced volume indicator shows that longer term accumulation has given way to near term selling pressure on Canoo. Yes, we can see the volume is not as overbought as it was a few months ago. Okay, so let's move on. The Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied recent price move. Events such as this may precede a pause or reversal in the near-term trend. So, given that Canoo is rising, and I wouldn't suggest that you jump in to buy it this hot. So we have seen that it clearly does pull back. And then it spikes and corrects, and we don't have any short interest figure for it, but it does pull back. So I would suggest you wait for it to pull back and correct, before you jump in. And as I said in the previous video before this one, if you really have to go into some of the stocks that are EV stocks, renewable energy stocks, battery stocks that are rising red hot now, benefiting from the rotation from growth stocks to small and micro caps, I would say you split your money, split them up, at least make it more than divide it into two or more, so that if you want to jump in right now that it is red hot, you do so. But when it consolidates or pulls back, then you also attack with more, so that you will have something to fight with. So I would even say divide it into three portions, or even up to four. Okay, that would be the theme of my suggestion in probably the subsequent stocks we're going to cover now. So the next one will be Plug Power. So Plug Power has lost some steam. It's down 1.29% in the session of today, the 13th of January 2020. 38.1 million shares have traded so far, which is above average. And some data here says that price reached a 52-week high of $71.76. This exceeds the previous high of 66.07 by $66.07 by $5.69, and is 2,736% above the 52-week low of $2.53. You can imagine that. So what do we have here? It has a market cap of $30.9 billion. has a large float of 468.048 million shares. 48% of them are held by institutions. So Plug Power is probably one of the best, the most regarded, amongst the most regarded of battery power, EV, renewable energy stocks, and it's believed that fuel cell is drawing sympathy from it as well. So we'll cover fuel cell in the next that will be the next stock we'll cover. So let's see what we have technically for Plug Power. Plug Power appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the monthly histogram is above zero. Comparative relative strength analysis shows that the issue is outperforming the S&P 500 index. Momentum for Plug Power is strongly bullish. The 14-period slow stochastic oscillator is above 80. Okay, the level which many analysts call overbought. Let's see if it's overbought. It's right in the overbought spectrum, as we can see this indicator pointing that out. This means that investors have been actively purchasing shares and driving the price higher. Volume as measured using the unbalanced volume indicator is rising, therefore bullish. This is because volume is greater on periods than on. This is because volume is greater on up periods than on down periods, and implies that buyers are presently more active than sellers. The Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. So this stock is also, because it has that regard, it's rapidly increasing in value. So we can see that about exactly a year ago it was trading at $2.53. Now it reached $77 and some fraction. Was it $71.76 yesterday, I believe? Oh yes, it was actually today. It reached there. So it has actually gradually pulled back a bit, or something like that. But it's also red hot. It's trading at a premium to its short-term trend lines and all that stuff. So, like I've been indicating before, if you want to jump in, split your money up, jump in, do so, but have something in your reserve to attack when it consolidates, pulls back, or cools down, or something like that. It's the stock has relentlessly continued to rise because of its prominence, because of its reputation, because of its regard. So even at that, yes, I would also say, split your money into some portions, and then gradually get in there as at when things have cooled back a bit. So the next one will be fuel cell energy. So fuel cell energy is also down 1.99% in the session of today, the 13th of January 2020. So yesterday, the 12th, it reached a 52-week high. So that's been pointed out here. That's been noted here. Okay, price triggered a new 52-week high event of $16.95 at 9:31 a.m. on the 12th of January 2021. Okay, sorry about that. So let's see. It has a market cap of $6.1 billion, a large float of 319.707 million shares. 31% of them are held by institutions. So this stock is quite related to quite related to Plug Power. So certain market participants are saying that Plug Power is the real deal, and fuel cell is drawing strength from it. And when probably certain market participants discovered fuel cell, it wasn't trading at very high prices as relative to Plug Power. They jumped in, and but given all of that, Plug Power in itself is also doing its best, doing its bit to take advantage of all that is there. So they have a product that is they are working on, even selling and making money. So let's see what we have. Okay, it has a short interest of 13.49%. That's a healthy one, healthy one. And indicates that let's say about 600. What I say? Okay, so the market cap is 6.1 billion. So a 13.49% of shots will indicate that we will have. How much would that be? 600 million. So we're looking at about $618 million in the sidelines that will come in, should the positive outcomes, should the price keep surging upwards. So this is a stock to watch, and definitely you definitely do watch it, So FCEL appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the MACD histogram is above zero. Comparative relative strength analysis shows that the issues are outperforming the S&P 500 index. Momentum for FCEL is strongly bullish. The 14-period slow stochastic oscillator is above 80, the level which many analysts call overbought. This means that investors have been actively purchasing shares and driving the price higher. The unbalanced volume indicator is rising and therefore bullish. This is because volume is greater on up periods and down periods, and that implies that buyers are presently more active than sellers. So just like the Plug Power and the other stocks we've covered earlier on, split your money into some portions. If you can't wait, if you can't, if you're really, if you have this fear of missing out, jump in now and see how it goes. The shares, they do pull back. Unlike Plug Power, FCEL does pull back, it does correct. So just be wise with your money. Don't plunge everything into it. And as a matter of fact, even split your money up into other stocks, other value stocks, around in the market right now, So let's go on to Solo or Electromechanica. So Electromechanica Vehicles Corp is down 8% in the session of 13th of January 2020. 12.3 million shares have traded so far, which is above average. So we have a market cap of $724.8 million, 81.716 million shares, and then it's a short interest of 10.53% as well, which would mean we have a $72 million in the sidelines that will definitely go in at some point. So let's see what we have here technically. Solo appears to be in a strong bullish trend. Okay, its 200-day moving average is upward sloping, and the MACD histogram is above zero. So yes, it's strongly bullish, and close to a correction as at today, the 13th of January 2020. While we're making this video, it's just slightly above 10% slightly less than 10% in correction. So it's not a correction yet, so it's getting close to that. Momentum for Solo is strongly bullish. The 14-period slow stochastic oscillator is rising as investors pay higher prices for shares. Volume as measured by the unbalanced volume indicator is bullish and rising. Therefore, volume as measured using the unbalanced volume indicator is rising and therefore bullish. This is because volume is greater on up periods than on down periods, and implies that buyers are presently more active than sellers. The Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may precede a pause or reversal in the near-term trend. So Electromechanica, just like all the other ones, is trying to correct, but it's not. It's still trading at very high premiums to its short-term trend line. So its closest short-term trend line is trading at $6.99, and it is currently at $8.19 as we make this video. So you can see that it's an indication of where the average price is for the last 10 days. It's at $7, and it's currently at $8.19 in the market at the moment. So you decide, do you want to buy it at this premium or not? So if you really have to do so, like we've indicated, split your money into some portions, and then probably get it now that it's trying to correct, and then if it corrects further, you can even add more money to it. So the next one will be Gevo. That will be it's a renewable energy stock, I believe. Yes. So let's see what's going on here. It's up 13.70%, just like GOEV. So it's an oil and gas consumables. So it says here that it reached its 52-week high today. The price reached a new 52-week high of $7.26. This exceeds the previous high of $6.16 by $1.12, and is 1,478.26% above the 52-week low of 0.46. You can see that. So this is how well it has performed. It has a 52-week low of $0.46. So what do we have here for GEOV or Gevo Inc.? So we have a market cap of $745.2 million, 122.965 billion shares float. 18% of them are held by institutions. It also has a good short interest of 13.84%. So we are talking about so that would be 74 plus. So we're looking at up to $75 million in the sidelines that are yet to be applied into the stock. So that is good. So it indicates a healthy skepticism towards the stock. And it is not just in terms of sentiment, it is monetary. You can see that in the short interest. And those going by its very high trading volumes, it's unfortunately going to take only one day to cover all of those 13.84% short positions. So Gevo appears to be in a strong bullish trend. Its 200-day moving average is upward sloping. The MACD histogram is above zero. The comparative relative strength analysis shows that it is outperforming the S&P 500 index. Momentum for Gevo is strongly bullish. The 14-period slow stochastic oscillator is above 80, the level which many analysts call overbought. So let's see. Yes, it's above. It's an overbought spectrum based on this indicator you're looking at right now. So this means that investors have been actively purchasing shares and driving the price higher. The volume as measured using the unbalanced volume indicator is rising, therefore bullish. This is because volume is greater on up periods than on down periods, and implies that buyers are presently more active than sellers. The Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may precede a pause or reversal in the near-term trend. So you can see, yes, it's it does correct, but of late it has never really corrected in below its short-term trend lines. So would I say it does correct? Let's see whether this is a correction. So this is $4.80, and this is $4.002. So yes, easily that is a correction. So it does correct. But right now it is red hot. So as was the case in the other stocks, split your money up. If you can't if you're afraid of missing out, by all means put in a little amount and then have some in reserve to attack when it does pull back, or on slow days, or when it consolidates, or anything like that. So if you're new to this channel, subscribe, like, and share if you're already a subscriber. Thank you very much for watching this video.